If you bank with Chase, Bank of America, or Wells Fargo, do not ignore what I'm about to explain, because one small banking mistake, one ignored notice, one fake phone call, or one missing account form could create serious problems for your money, your Social Security deposit, your retirement savings, or your family. Now listen carefully. This does not mean your bank is failing. This does not mean your account is frozen today. This does not mean every Chase, Bank of America, or Wells Fargo customer is in danger. But it does mean one thing. If your money is sitting in one of these major banks, you need to check your account notices, your fraud alerts, your beneficiary settings, your deposit history, your account ownership, and your account security before a small issue turns into a major problem. Most seniors check only one thing. They check the balance, they open the app, they see if Social Security arrived, they see if the pension came in, they see if the bills cleared, they see if the debit card still works. Then they assume everything is fine. But here is the hidden mistake. Your balance does not tell you everything. Your balance does not tell you whether your bank sent an important security notice. It does not tell you whether your address needs updating. It does not tell you whether your phone number is outdated. It does not tell you whether your beneficiary form is missing. It does not tell you whether your payable on death form is wrong. It does not tell you whether a scammer tried to get into your account. It does not tell you whether a large cash deposit needs a paper trail. It does not tell you whether your money is fully insured based on the way your account is titled. And it does not tell you whether someone pretending to be your bank is trying to scare you into moving money out of your own account. That is why this warning matters, because the danger is not always the bank. Sometimes the danger is the notice you ignored. Sometimes the danger is the fake caller you trusted. Sometimes the danger is the account form you never updated. Sometimes the danger is the cash deposit you cannot explain later. And sometimes the danger is a family member being added to an account without understanding what that really means. Stay with me, because in this video, I am going to show you the bank account checks seniors should make now, the mistake scammers use against Chase, Bank of America, and Wells Fargo customers, the cash deposit rule many people misunderstand, and the one account form families often discover too late. And later in this video, I will show you the one question every senior should ask before trusting any call, text, email, or bank alert that says your money is at risk. Before we go further, share this video with someone over 60 who uses a major bank, not later, right now. Because one warning can help someone avoid a fake bank call, a missed notice, a delayed transaction, or a paperwork mistake that causes weeks of stress. Now, let's start with the first thing you need to understand. Big banks send many types of notices. Some are routine, some are marketing, some are about privacy, some are about security, some are about account changes, some are about fraud alerts, some are about returned mail, some are about updated identification, some are about online access, some are about unusual activity, and many seniors ignore them because the letters look boring, the emails look normal, and the alerts look like every other bank message. But the mistake is not being careful. The mistake is ignoring everything without checking what is real. If you receive a notice from Chase, Bank of America, Wells Fargo, or any bank, do not click random links first. Do not call the phone number in a suspicious text. Do not respond to a message that pressures you. Do not open an attachment because it says urgent bank notice. And do not give personal information just because the message uses your bank's name. Instead, go directly to the bank's official website. Use the official app, call the number on the back of your card, or visit a branch. That one step can protect you, because scammers know the names of the big banks. They use Chase, they use Bank of America, they use Wells Fargo, they use words like fraud department, security team, account locked, suspicious transfer, account review, urgent verification, and frozen payment. They know those words scare people. And they especially target seniors because they know many seniors depend on these accounts for Social Security, retirement savings, pension money, medical payments, mortgage payments, rent, utilities, and everyday bills. This brings us to warning number 1. Never move money because someone calls and says your account is at risk. This is one of the most dangerous scams right now. And it works because it sounds official. The caller may sound professional. They may know your name. They may know the bank you use. They may say they are from your bank's fraud department. They may say someone tried to withdraw money. They may say your debit card was compromised. They may say your account was hacked. They may say there is a safe account where you need to move your money. They may tell you not to visit a branch. They may tell you not to tell your family. They may even say bank employees are involved. Stop right there. That is the trap. A real bank may contact you about suspicious activity. A real bank may send alerts. A real bank may ask you to confirm whether you made a transaction. But a real bank should not pressure you to move your money into a safe account created by a caller. A real bank should not pressure you to wire money. A real bank should not tell you to send Zelle. A real bank should not tell you to buy gift cards. A real bank should not tell you to transfer crypto. A real bank should not tell you to keep the conversation secret. And a real bank should not tell you to distrust everyone around you. If a caller says your money is at risk and you need to act immediately, hang up. Do not argue. Do not explain. Do not prove anything. Do not stay on the phone because they sound polite. Do not let them keep you scared. Hang up and call your bank using the number printed on your card or shown inside the official app. That is the key. Do not call the number they give you. Do not trust caller ID. Do not trust a text link. Do not trust an email button. Go around the message and contact the bank yourself. This one move can stop a scam before it empties your account. Now, here is the next warning, and this one catches many seniors with good intentions, especially after selling a car, receiving cash from family, cleaning out an old home safe, or moving emergency money into the bank. Warning number 2. Large cash deposits without records can create questions. If you deposit a large amount of cash at Chase, Bank of America, Wells Fargo, or any other bank, the bank may ask for identification and information. That does not automatically mean you did anything wrong. It does not mean the IRS is accusing you. It does not mean your money is illegal. But federal rules require banks to report certain large cash transactions. And if you are handling cash, you need to keep records. Maybe you sold a car. Maybe you sold furniture. Maybe you received cash from a family member. Maybe you kept emergency money at home. Maybe you are moving cash into the bank because you feel safer. Maybe your spouse passed away and you are organizing old money. Maybe you are trying to simplify your accounts. That can all be normal, but if you cannot explain where the cash came from, it may create stress later. The bank may ask questions. Your family may ask questions. A tax professional may ask questions. If there is an estate issue, your children may ask questions. If there is a tax issue, you may need documents. So, keep a paper trail, a bill of sale, a receipt, a withdrawal slip, a note showing where the money came from, a copy of a check, a document from an estate, a record of a sale, a letter explaining the source. The mistake is not depositing cash. The mistake is depositing cash with no explanation and assuming nobody will ever ask. Now listen carefully to this next part. Do not break up cash deposits just to avoid a bank report. That can be worse than the original deposit. Some people think, I will just deposit smaller amounts so nobody asks questions. They deposit some today, some tomorrow, some at another branch, some into another account. They think they are avoiding trouble. But breaking up transactions to avoid reporting can look suspicious and can create serious legal problems. The safe approach is simple. Be honest. Keep records. Do not play games with the deposit amount. If the money is legitimate, document it. If you are unsure, ask a tax professional or the bank what records they need. Do not ask, how much can I deposit without a report? That is the wrong question. Ask, what documentation should I keep so this transaction is clear? That difference matters, because the money may be legal, the source may be honest, the reason may be simple, but the pattern can still create questions if it looks like you were trying to hide something. Now here is the next micro hook. The next warning is the one that makes many seniors feel embarrassed because they think the bank is blocking their own money. Warning number 3. Your bank may place holds or restrictions when something looks unusual. This scares many seniors. They try to use a card and it does not work. They try to make a transfer and the bank asks for verification. They try to pay a bill and the transaction is delayed. They try to log in and the account is locked. They think, why is my own bank stopping me from using my own money? Sometimes the reason is fraud prevention. Sometimes the bank wants to verify identity. Sometimes there is suspicious activity. Sometimes your mail was returned. Sometimes your phone number changed. Sometimes your email is outdated. Sometimes your online login was flagged. Sometimes there was an unusual transfer. Sometimes the bank has to follow internal security procedures. This does not always mean something terrible happened, but it does mean you should not ignore account notices. If your bank asks you to verify information, do it through official channels. If your bank sends an alert, check it through the app or official website. If your card stops working, call the number on the card. If your online access is locked, do not click a random email link. Go directly to the bank. The hidden mistake is waiting until a bill is due, a mortgage payment is scheduled, or Social Security arrives before checking the problem. If you rely on that account for monthly expenses, keep your contact information updated. Make sure your phone number is correct. Make sure your mailing address is correct. Make sure your email is correct. Make sure trusted alerts are turned on. Make sure you recognize your recent transactions. And make sure you can log in before an emergency happens. Because the worst time to discover a bank problem is the day you need the money. Now here is the next warning. This one is not about scams. It is about protection, and many people with large balances misunderstand it. Warning number 4. Do not assume every dollar in your bank is automatically protected the same way. Many seniors hear the words FDIC insured and think, all my money is safe. FDIC insurance is extremely important, but it has limits and categories. The standard insurance amount is generally $250,000 per depositor, per insured bank, for each ownership category. That means how your account is titled can matter. Single accounts, joint accounts, retirement accounts, trust accounts, payable on death accounts. These can be treated differently. If you sold a home, received an inheritance, moved retirement savings, or keep large CDs at the same bank, do not guess. Check your coverage. Ask the bank. Use the FDIC estimator. Ask whether accounts at the same bank are being combined under the same ownership category. Ask whether your beneficiaries are properly listed. Ask whether your trust or payable on death accounts meet the requirements. This is especially important for seniors who keep large amounts at one big bank because it feels convenient. Convenience is not the same as a coverage check. The mistake is not trusting a bank. The mistake is assuming you understand the insurance rules without checking. And this is where families get surprised. They think money is protected because the bank is famous. But the name of the bank is not the only thing that matters. The ownership category matters. The account title matters. The beneficiary setup may matter. The bank location does not automatically create unlimited coverage. So if you have large balances, check before you assume. Now, let's move to the warning many families discover too late. Warning number 5. Your beneficiary or payable on death form may matter more than your family realizes. This is where seniors can create problems without knowing it. You may think your will controls everything, but certain bank accounts may pass based on account titles, joint ownership, or payable on death beneficiary forms. If the form is missing, outdated, or names the wrong person, your family may face delays, confusion, or conflict. Maybe your spouse passed away, and the account was never updated. Maybe you named one child years ago and forgot. Maybe you remarried. Maybe you moved. Maybe your will says one thing, but your bank form says another. Maybe nobody knows who is listed. That can become a serious problem after death. So, ask your bank, do I have a beneficiary on this account? Is it payable on death? Who is listed? Are the names correct? What happens if I die? Does this account go through probate? Does this match my will or trust? Can I get confirmation in writing? Do not leave this to memory. Family members may argue later. The bank will follow paperwork, so make sure the paperwork matches what you actually want. This is especially important if you have a blended family, more than one child, a deceased spouse, a second marriage, or old accounts you opened years ago. Do not assume your family will just know. After death, banks follow documents, not promises, not memories, not what someone says you meant. Documents. Now, here is the next micro hook. The next warning looks convenient today, but it can create a family fight tomorrow. Warning number 6. Joint accounts can create access problems and family problems. Many seniors add an adult child to a Chase, Bank of America, or Wells Fargo account so that child can help pay bills. That may feel convenient, but if that person becomes a joint owner, they may have real access. They may be able to withdraw money. They may be able to transfer funds. They may be able to use the account. Their creditors or personal problems may create complications. And after death, that account may not pass the way the senior expected. This does not mean you should never add someone, but it means you should not do it casually. Ask the bank, is this person an owner or just a helper? Can they withdraw money? Can they close the account? Can they transfer funds? Can they get a debit card? What happens when I die? Does my will control this account? Could a payable on death beneficiary be safer? Could a power of attorney be better? Could a separate bill-paying account reduce risk? Do not sign a bank form just because it feels easier today. The wrong form can create a family fight tomorrow. This is one of the biggest senior banking mistakes because it comes from a good place. A senior needs help. A child wants to help. Everyone means well, but the form may give more power than the senior realizes. That is why you must ask the bank exactly what the form does before signing it. Now, let's talk about the final checklist. If you bank with Chase, Bank of America, Wells Fargo, or any major bank, check these 7 things today. Number 1. Check your official bank alerts. Do not trust links from random texts. Use the official app, website, branch, or card phone number. Number 2. Check your contact information. Make sure your address, phone number, and email are correct. Number 3. Check your recent activity. Look for small test charges, unknown transfers, new payees, strange logins, or unusual alerts. Number 4. Check your cash deposit records. If you deposit large cash, keep a paper trail. Number 5. Check your FDIC coverage, especially if you have large balances, CDs, inheritance money, or house sale money. Number 6. Check your beneficiaries. Make sure your payable on death forms and account titles match your real wishes. Number 7. Check before moving money. If someone calls and says your account is at risk, hang up and verify directly. Before you leave, remember these 5 words: verify, document, update, protect, confirm. Verify the message, document the money, update the account, protect your login, confirm the beneficiary. Your bank balance is only one part of the story. The real protection is in the paperwork, the alerts, the account setup, and the decisions you make before something goes wrong. So if you bank with Chase, Bank of America, or Wells Fargo, check this now. Not because you should panic, but because seniors who check early avoid the stress seniors feel later. Share this with someone who keeps retirement money, Social Security deposits, pension income, or emergency savings in a major bank. One simple check today could protect their money, their family, and their peace of mind.